Last week, the US stock market was very calm, even sluggish. Fluctuations were rather unnoticeable and there were no sharp swings even for a day. However, fears of rising inflation persist. Last week, US Secretary of the Treasury Janet Yellen said that inflation would remain high until the end of the year, but then decline in 2022. However, expectations of growing inflation are unlikely to lead to a drop in the equity market as long as the Fed keeps supporting the economy. In Congress, Biden's $2 trillion infrastructure plan was cut almost twice due to strong opposition from Republicans. Yet, the chances of its adoption are high, which boosts market sentiment. Policymakers should also discuss the way this plan will be financed. Reports on durable goods orders and weekly jobless claims turned out to be weak. This is a sign that the US economy is expanding, but at a slower pace. The trajectory of the Dow is quite predictable. It has reached its historical high of 34,700 points. However, on the chart we can see that the index will soon face a temporary or permanent correction. Investors probably want to make sure that the revival of the US economy is steady ahead of the release of industrial and jobs data later this week. Besides, the movement of the Dow will hugely depend on these reports. In the meantime, it's likely to be trading in the range from 34,700 to 34,450 in the next few days. Like the Dow, S&P500 index has also approached its all-time high in May. Now the quote is located at 4,230. Weak macroeconomic reports and ultra-soft monetary policy of the Federal Reserve are the main reasons for the steady rise of the index. Despite the fact that the US economy will probably reach its peak this quarter and official inflation targets are already higher than the long-term targets, Fed officials assure investors that a hike in inflation is temporary. Moreover, the regulator pledges to maintain the quantitative easing program and low key rates in the long term. So the index is likely to correct a little bit from the peak to 4,200 or 4,205. Although the NASDAQ composite has been growing steadily over the past week, it has already begun to correct downwards. This is a clear sign that our forecasts are correct. Currently, trading is conducted at the level of 13,750. However, before the end of the week, it may dip to 13,600. And now let's take a closer look at the movements of some companies' shares. Apple stocks have been facing strong bearish pressure since they surged to an all-time high in January. For this reason, some traders start doubting the positive outlook for the company in the post-COVID world. We can see that Apple's shares are currently trading at an average of $124, and this is almost 16% lower than its previous high. Reportedly, Uber is experiencing a mass driver shortage, which forces the company to increase the cost of its services. This is likely to have a positive impact on the shares unless something unexpected happens. The largest oil companies are currently extending gains. For example, in just one day, the price of Exxon Mobil shares has risen by about $1. Such an increase is associated, of course, with growing demand for oil. Its price has been climbing rapidly, and it's not going to stop. The main events of the first week of summer will be the publication of manufacturing and business activity PMI indices for May in the US and Europe, as well as US jobs data on Friday. Forecasts for the US labor market are not as bright as they used to be. The economy added only 266,000 jobs, while economists had predicted an increase of almost 1 million. At the same time, unemployment rose by 0.1%. Therefore, analysts expect the main indices to enter the correctional phase after they have hit their peaks. For how long? This question is still relevant. You've watched a weekly financial review with me, Anna Kasatkina. Stay tuned.